Value strategies buy companies trading below their true value and hold them until the market recognizes their worth. That doesn't happen overnight. Value investing requires patience, a fact that its disciples have been forced to remember in recent years. Over the decade through 2024, the Morningstar US Value Index trailed the growth index by nearly 5 percentage points per year. Value stocks have held up better in 2025, however, beating their growth counterparts by about 10 percentage points. Is this a value resurgence or another false start? It's hard to say, but here are 3 great value ETFs for investors that are keen to find out. Let's start with Capital Group Dividend Value ETF. It trades under the ticker CGDV and earns a silver Morningstar medalist rating thanks to its long-tenured team, risk-aware approach, and low fees. This actively managed fund sticks to Capital Group's multi-manager approach. 5 named managers run sleeves of the portfolio, each with at least 2 decades of experience and the latitude to pursue their best ideas. Chris Bookbinder leads the charge and has managed this strategy since 2007. The managers target high-quality companies with a long history of paying dividends. Most of them have paid dividends for 10 straight years, like top holdings Microsoft and RTX Corp. Just 52 stocks constituted the portfolio as of March 2025, but their collective quality makes this a lower volatility offering than most value ETFs. Combining strong team and strategy has paid off. CGDV gained 12.1% annualized over the 3 years through March 2025, trouncing the Morningstar US Value's 8.9% return and ranking among the top 1% of its peers in the large value Morningstar category. Next up is Invesco RAFI US 1000 ETF, ticker PRF. Its new benchmark doesn't change its discipline, cost advantage, or silver Morningstar medalist rating. This index strategy sweeps in 1,000 US stocks and weights them by their fundamentals, an approach that divorces portfolio weight from stock price. When the index rebalances, it effectively doubles down on cheaper stocks and trims exposure to those on the rise, embodying the buy low, sell high philosophy. The strategy should be at its best when overhyped stocks flounder and unloved ones rally. PRF sits in the large value category, but it covers the full large and mid-cap market. That broad scope gives it an edge over narrower value strategies and helps it stay competitive when value stocks are out of favor. This fund is designed to outperform in quick bursts, and those periods have powered stellar long-term results. The fund ranked in its category's top quintile over the trailing 5, 10, and 15-year periods. The final fund today is Dimensional International Value ETF, DFIV. It charges just 27 basis points per year, helping it earn a Morningstar medalist rating of silver. This systematic active fund sweeps in large and mid-cap stocks that represent the cheapest third of the foreign developed market. Dimensional starts with each stock's market cap weight, then tilts towards smaller, more profitable companies with lower valuations. Small, high quality, and cheap stocks have historically been tied to market-beating returns. Leaning into those factors should help this fund carve out an edge. Diversification is a key strength here as well. The portfolio tallies more than 500 holdings, and the top 10 of them rarely exceed 20% of assets. That should ensure that one poor performer doesn't tank the entire strategy. Dimensional converted this strategy from a mutual fund into an ETF in September 2021. From that point through March 2025, its 9.1% annualized gain ranked in the top 10% of the foreign large value category.